we met the client, the CEO, and their personal assistant.
Yeah.
And they were sat in reception with lots of designer shopping bags.
Shopping bags. Wow.
And pretty much the first thing they said to us was, "Have you ever been to Bicester Village? It's amazing." And I sat there thinking, this is all going to go on the company bank account, isn't it?
Yeah.
But we did what we had to do. We engaged with the client, but ultimately the firm took the decision to walk away. Now, I don't know, I probably should have, from a curiosity point of view, had a look. Did this company ever make it onto the London Stock Exchange? I doubt it, because
Yeah.
their financial control was allowing personal expenses of a
Excellent.
CEO, which, that's investors' money.
Yeah.
Mulberry handbags.
Today, on the Storyteller's Lens, I'm joined by someone who proves that finance is not just about numbers, it's about vision, creativity, and strategy. Lynsey Luthra is a tenacious chartered accountant with extensive experience in financial control, risk, and audit across sectors as diverse as policing, technology, government, and the arts. She's not just a finance leader, she's a board trustee, an award winning director of the year for public and third sector, and a champion of ESG. Currently serving as Audit and Risk Manager at the British Transport Police Authority, Lynsey blends entrepreneurial thinking with a knack for making complex finance accessible. She is also an Executive MBA scholar at the University of Surrey, just a year ahead of me. So I'm delighted to call her my colleague. And here's the twist. Lynsey will tell you herself she's not a numbers person. She's driven by the creative side of finance, finding innovative ways to make money work harder and smarter. Today, we'll dive into how finance can be a powerful enabler for entrepreneurs, women in business, and anyone who wants to protect, grow, and future proof their hard earned money. Lynsey, welcome to the show.
So much for having me.
I'll just, straight away jump to my first question, which is you describe yourself as not a numbers person. So, what do you to finance in the first place?
Sorry, could you repeat that?
Yes, you describe yourself as not a numbers person. So, what drew you to finance in the first place?
Yeah, sure. So I graduated as a politics student, actually, and I had no idea what I wanted to do with my career. And I was very fortunate that I was offered a place with PricewaterhouseCoopers to join their grad scheme and basically become an auditor. As part of that, we studied to become a chartered accountant. And even though there's a lot of numbers in accountancy, there's no getting away from that. That would really be otherwise. But actually, a lot of it is about processes and about managing risk. And actually, such a huge part of it is about communication. And so I was able with PwC to test out lots of different industries, different roles. And it led me towards a career in internal audit and risk, which was where my forte was, really understanding those processes, those financial controls, which is more about how rather than analyzing the numbers.
Yeah. Sounds great. Sounds perfect. So your career spans sectors, from policing to the arts. How has that shaped your approach to finance and risk?
That's an interesting question. So, what I would say, first of all, is working across different industries gives you such an amazing insight into how different organizations, different industries do best practice in different areas. So charities, for example, I always cite as being really great at showing the impact of their investments. Working. Sorry, what was your original question? Oh,
Yeah,
I need
sure.
to.
No, 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 all cool. Your career, your career, it spans
Oh.
sectors from policing to the arts. How has that shaped your approach to finance and risk?
Yeah, so working across different sectors, I've been able to take best practice from each of these different industries. For example, working in charities is amazing in terms of they have to show the impact of how they spend their money or they're not going to get more funding. That means they're really good at it. And that's lessons I've been able to bring into government, to the startup world. I think there's some things that are basic and they're going to be in place across any industry and sector. For example, your basic financial controls about protecting your cash and your assets, understanding your budgets and your expenditure. But these different pockets of best practice just allow you to think about it in a different way. And that's where that cross industry experience really lets me bring value to the
Yeah.
organizations I work with.
So different industries have, of course, the profit is the primary concern. But again, when it comes to, I think the source of finance, that is different. So of course, they operate differently when it comes to finance and risk.
Yeah, absolutely. I mean, government is so different to the private sector because it's not about profit. It's about basically spending bang on your budget because you don't want to underspend because that's money that could be spent on public services, but you don't want to overspend because then, well, you get a rather hefty telling off from the Treasury, I'd imagine.
Yeah.
And certainly across industries as well. So different industries and different organizations within sectors as well can have different risk appetites. So, if you're an investment company, you might have a really open risk appetite
Yeah.
to
Yeah.
trying to make the most of your money. Like I say, on the opposite scale, you've got government very conservative. If you're a startup, again, you might be taking risk to try and see what works and what's going to um, turn into a real value proposition. Startups, particularly technology startups, in my experience, has been very risk averse. Again, it's all about taking chances, trying
Yeah.
to be opportunistic.
Yeah.
So, yeah, some of it is about adapting to the organization and the industry you're in. But what I would say is, having worked through many different organizations and sectors, I think there's a baseline level that you just shouldn't breach there. If you run out of cash, you're going to be in trouble. And that
Yeah.
is any organization. So that's a basic, that's a foundation level
Yeah.
financial control you
Yeah.
must never forget.
Yeah. Cool. Good to know. Good to know. So, what inspired you to pursue an executive MBA at this stage in your career?
Oh, well, it's something I've always thought about. And the real driver for me is that we live in this ever changing world, a VUCA world, it's sometimes called. They're particularly working in smaller organizations where I was trying to really push the agenda for sustainability, push the agenda for ED&I. It was really hard. Um, the the reason for doing an MBA is to try and understand, we know what to do. I don't need to read a textbook to know that ED&I is the right thing to do. But how are organizations actually doing it in practice? Because that was the gap for me. So I thought doing an MBA, actually learning different viewpoints,
Yeah.
in the network to be able to hear from people who have managed to effect some of these changes. And it's been a really wonderful learning experience.
I'm sure. I'm sure. Has it helped you in your career so far, like in terms of developing your understanding?
Yeah, absolutely. So one example I would give is you've got this to look forward to, the change management module, Really excellent. So again, I know a bit about change management. I had that real world experience, but actually pulling it back to the theory and actually hearing that it depends is the key phrase, and that's okay. It's actually really reassuring, and it gave me a whole other toolkit of really practical things to do in my organization. So particularly, in policing, we're looking to figure out how we can be more productive, we can do more for victims of crime, for the public, with, let's face it, a rather constrained budget from government. And part of that is about innovation, it's about technology.
Yeah,
And I feel much more confident going into board meetings to be able to say, actually, this is what's worked well in this organization. This tool could help us just
yeah,
reframe the problem.
yeah.
Been so useful just having that toolkit.
Yeah, of course, of course. Now you are pretty hands-on with things because you're already aware of things. I'm sure that must have been a great experience for you, the MBA so far. Yeah,
Yeah, no, absolutely. Apart from the learnings, just the people you meet as well is fantastic. And yeah, I might never have met you had we not
yeah,
done the MBA.
yeah, yeah. There is some higher power in the play. So, Lindsay, when we were having our initial conversation, when we have had our initial conversation, you mentioned that how you are a creative person, a creative side of the finance. So, how do you blend creativity with financial discipline in your work?
Good question. So I think for me, where the creativity comes in is about how you communicate complex financial issues to non-financial people. So I think I'll say I'm a bit of a geek. What I really enjoy is pulling together board reports. That sounds so geeky,
Yeah,
but actually being able to communicate really complex issues in a creative way. And certainly one of my approaches is to use much more infographic types of
yeah,
communication. Um, and yeah, so that allows me to blend. What I would say is, when people talk about creative accounting, that's not usually meant in a positive way. And creativity can come in for making decisions. I think that's a real key, and that's why I actually think the finance module of the MBA should be the most important one, because
yeah,
it helps you make these decisions and come up with business cases and investment proposals. But in terms of the kind of bread and butter of accountancy, financial controls, that doesn't change much. That's pretty much by the book. So I guess that's why I moved away from numbers to be more of a controls, risk, reporting type of
yeah,
career.
yeah. I 100% agree. Being able to make other people understand the nitty gritty, the complexity of finance is a creative thing. You, you
Yeah,
just,
I
yeah,
think so. Yeah, and it all comes back to communication. So, you're a marketing professional and you would have the same challenge trying to explain complex marketing
yeah,
terminology.
yeah,
So I think actually going into a career and moving forward, personally, I think communication is one of the most important skills
true,
someone can have.
true.
When I interviewed recently for Director of Finance and Commercial for the charity I'm a trustee of, my interview questions tested their accounting and finance knowledge,
Wow,
but more importantly, tested could they communicate that to non-finance professionals,
finance.
to our CEO, our ops director, and that's why they were selected for that job. Um,
Wow, wow, that's amazing. That's amazing. So, my next question is you have said cash is king. Can you break that down for small business owners in practical terms?
yeah, well, you tell me if I articulate this in an understandable way. So ultimately, running a business, you're dependent on a value chain, right? You're dependent on customers buying your goods or service. You're dependent on the suppliers that enable you to do that. And that could be anything from actual cost of producing the product you sell to having a rental space to having a website. All these incur costs. Now, if you imagine you're unable to pay any of these suppliers, you imagine your customer takes too long to pay you, so your bank account is going into the deficit, you're in trouble. You know, your suppliers are not going to, unless you've got an amazing relationship with them,
Yeah.
they're not going to give you what you need to carry on your business without getting paid. So that's the long and short of why cash is king. And
Okay. Yeah.
when you see businesses fail, it's because they've ran out of cash and they're not able to pay to continue their operations. If I may, it's not dissimilar to your personal finances. You know what your income is each month. You know what you've got to spend your money on, your rent or your mortgage, your food, whatever your general living costs. If you go beneath that and you run out of money, you're in trouble. I think sometimes actually in business, if you relate to just personal finance, it can help you just understand a complex terminology that doesn't have to be complex.
Complex. Yeah. Yeah. Sounds good. So, what is the simplest way for business owners to start budgeting and analyzing spend without getting lost in spreadsheets?
Right. Great question. So I love a spreadsheet, but actually, we are so fortunate that in this day and age, everything is technology driven. And there are some really great, user friendly, non accountant accounting software out there. I don't want to name names, but there's a few that advertise regularly. I use one of them at the charity I'm a trustee of, which I don't have to do anything with anymore. But in the early days, we needed it simple and we needed non-finance professionals to be able to use it. It's really intuitive. It's just about keeping it simple. When you're doing your budget, keep it at a high enough level that it tells you what you need to know. If detail would be useful, add in detail, break down categories. If it's not useful, don't do it. Any of these small business accounting software packages will, at the click of a button, integrate to your bank account. It will, at the click of a button, show you, here's your budget, here's what you've spent, here's the difference.
Yeah.
And what's really key here is, and this is where it goes beyond the numbers and into the storytelling, is, well, why has that happened? If you've wildly overspent on something, do you understand why that's happened? Is it okay that that's happened? Because, life happens. If it's not okay, how are you going to reduce spending somewhere else to balance? Or, is it a red flag? Has something gone wrong? Has somebody bought a Mulberry handbag?
Yeah. Okay, so basically, so you mentioned that there are softwares which can basically handle everything. You can directly link it to your bank account, and basically, it can actually show you where have you gone above your expenditure, such as if you have bought Mulberry handbag, and if you whether you are in budget, your expenditure and everything. So this is how they can keep a track. Ah, okay, good to know. And
Yeah, I don't know. I don't know that I should be advertising specific organizations' software. So
yeah, yeah, I'm sure listeners can find it out themselves. They should do some work. How do you assess value for money, both in the short term and in the long term, when making business decisions?
So I really love how you framed that question in the short and the long term, because I think that makes a real big difference to your value for money decision making. Um, so for me, pulling it back to a lesson I learned as a kid in terms of finance, buy cheap, buy twice was what I was told.
Yeah.
I think anybody that's ever been lured in with a bargain of, you know, some kind of product that seems too cheap, too good to be true, it usually is. So, yeah, I wrote a list of what I thought when I was thinking about this last night should be. I think when you're evaluating value for money, there's just a few questions you need to ask yourself. So, number one, what is the purpose of this thing I'm buying? And as part of that, what features does it need to have? What would really add value? Do you actually need it? And I think, particularly as a small business, that's a question you should constantly challenge yourself on. You might think you need something, you might want something. If cash is tight, you've really got to prioritize, and the time period it relates to, which comes back to your short and long term question. The other thing I would say is affordability. So again, not just do I need it? Can I afford it? That will impact your decision making on which item you're going to buy. And if I might give an example, you're a small business, you're furnishing your office for the first time, you're going to need desks and office chairs. Now, having seen a colleague recently purchase some office chairs, right, there's such a broad range of types of chair and different values. So, the say the very cheapest one is 30 quid. Well, okay, you're going to buy that 30 quid chair. Maybe that's all you can afford, and that's perfectly okay. And you know that as the money comes in, as you get more clients on board, you're going to have to replace it and buy something in the future. But if you can afford it, and there's, say, a 60 or 80 quid chair that is actually going to last you, 3 to 5 years rather than one
Yeah.
year, it's less likely to break, which, could actually hurt an employee, then you might make that decision to buy that chair once, whereas your person buying the 30 quid chair ends up buying three in the space of 5 years. So it ends
Yeah.
up more expensive.
Expensive. Yeah.
But then genuinely, if you're a client facing business, if you're going to have clients in the office, if you want to portray your organization as really modern and luxurious, you might end up going to buy a really expensive chair because that
Yeah.
serves the impression you want to serve. You want your employees to be super comfortable,
Yeah.
and to have this great impression of your organization. So I think I think it's not always as simple as what the price point is. I think there's a lot more consideration on what is the true value for you. And again, coming back to that cost piece, your really cheap office chair that you're going to have to buy several times,
Several times.
yes, it has a wider cost as well in terms of sustainability in the planet. And that's an additional cost that you don't see in your bank balance, but it will have longer term repercussions for everybody.
Yeah. So basically, anything that actually involves durability, I would say any product. And I think you shouldn't, cut corners over there, because if you buy cheap, that is basically going to cost you more, because then, it'll involve repairing or replacing. Okay. And also, yeah, sorry.
Same with service providers. Okay, so if at the end of this call you think, hey, I'm going to go out and get an accountant, and you literally take the cheapest one you can get, the service you get will align to what you pay, and you might be paying the least for the cheapest accountant, but the person who's gone and done their research and really got someone who can add that value, that's gonna have such a greater financial return than just, hey, let's go with the cheapest.
Yeah, true, true. I 100% agree. So, my next question is, you have worked with a range of organizations. What financial controls make the biggest difference in protecting both your own money and investors' assets?
That's another great question. Yeah. So, in terms of protecting your money and your investors' money potentially, I think it comes back to that real oversight of spend, what your money's doing. Um, Apart from the fact that you talked about how cash is king and you need to make sure that you're not overcommitting or undercommitting with your spend, what it'll do is it'll identify red flags as well. So, particularly if there's expenditure that's gone through which you as a business owner weren't aware of, that regular oversight will enable you to identify that and challenge and question. In terms of, understanding anomalies, it's actually really easy to do, particularly with a software solution. So, what I personally do is I just download all the transactions and I'll do a bit of a scanning analytic and just look out for any suppliers that I wouldn't expect to be there, any large amounts that again I hadn't been expecting. And actually when you work with a bigger organization, you generally work with the person on the ground, the budget holder that's kind of dealing with the day in, day out, because it might be that there's a real genuine business need, that there's been this huge bit of expenditure and they have that detail. And certainly for a smaller company, what I tend to do, and this is where, I do love a spreadsheet, is downloading it, filtering the amount from highest to lowest. So again, you're concentrating on those high value
Yeah.
expenditure amounts. Um, in doing that as well, looking for any repeat amounts, which could identify, for example, if you've paid something twice by accident,
Yeah.
then recoup that money. And the other thing is, where you have recurring values, particularly round values in the fraud world, which is a whole other topic in itself. But people, if they're trying out, can I skim a little bit from my employer or from an account I have access to, they'll do lots of small amounts. They won't just do 500 quid and take it out. They'll do 50 transactions of 10 quid, because generally, as I said earlier, you look at these big spend. So yeah, for me, just doing that scanning analysis, doing that regular oversight, yes, it takes time. Yeah, it's a bit boring, but it will pay you dividends. And financial control is so important when you're looking for funders, looking for investors. They want to know that you're doing this stuff and that you're
Yeah.
taking it seriously.
Yeah. So basically, analysis and finding out if there are any red flags, and if if there are any expenses that can be reduced. So I think so. This way, you will be able to attract investors, because they would want to see if their money is in right hands. If somebody who values money, I'm just
Yeah.
asking.
Yeah. So I think, look, if you're going to investors, going to funders, so I don't have a direct experience of investors, but I can certainly talk about large funders from a charity point of view. And I don't think it's dissimilar. They're going to ask you about, what are your financial protocols? How do you do risk management? So it's either about documenting, here's this monthly checklist of all the financial checks we do, and you can show that to them. Here's what we do. From an audit point of view, people generally want to see evidence that something happens. So as old school as it sounds, print the checklist, tick it through, sign it, and you can demonstrate that you're taking these financial checks seriously. You're going through a sensible checklist, and therefore you're protecting the company's cash assets. Um, even it is a question that will always be asked.
Yeah.
How do you manage your
Yeah.
finance? How do you do risk management?
Yeah.
So
Yeah.
personally for me, write it down, you can present it to them. It's much easier than, especially if you're not a finance professional, trying to talk about it.
So, how important is it to show strong financial controls and attracting investors?
Yeah, so let me give you an example here that really shows how important it is. So many, many years ago now, when I was still in the audit world, I had been tasked to basically do some checks for a company that wanted to list on the London Stock Exchange.
Yeah, yeah,
So this is just normal protocol. An audit firm will re-audit an audited set of accounts just to sense check that the financial control environment is robust, that the audited accounts that are being presented for listing are indeed true and fair, they're accurate. And I promise you this is a true story, but I don't know if you will believe me. So my colleague, this is a Mulberry handbag
yeah,
story.
yeah.
So my colleague says to me, "Hey, Lynsey, why has this company got Mulberry handbag expenditure?" Throwing the question back at you, Akanksha, is
Yeah,
you think when we did the poll,
yeah,
you can legitimately expense a Mulberry handbag? The answer is it depends, as
yeah,
a lot of things, but this was an IT company.
yeah, yeah.
They have no need for a
For
Mulberry.
Mulberry bag, yeah,
So, yeah, my colleague continued this kind of scanning analytic of all these expenses. There were other things on there as well, which were very much personal expenses. So we were briefing our director saying, this is not okay. And actually, not really sure we want to retain this client,
yeah,
because accounting firms, you have to be so careful. So, as we were talking through this, my director's phone went off and reception said, "Oh, this client is downstairs. They just popped in case you were available to meet and say hello." Now, again, this does not happen.
right.
Auditors could be anywhere, anytime, quite often on client sites. So nobody just pops in to see an auditor, but this client did. So my director and I kind of looked at each other and said, "Okay, let's pop downstairs." And I promise you this is 100% true. We met the client, the CEO and their personal assistant,
Yeah,
and they were sat in reception with lots of designer shopping bags.
shopping bags. Wow.
And pretty much the first thing they said to us was, "Have you ever been to Bicester Village? It's amazing." And I sat there thinking, this is all going to go on the company bank account, isn't
Yeah,
it? So we did what we had to do. We engaged with the client, but ultimately the firm took the decision to walk away. Now, I don't know. I probably should have, from a curiosity point of view, had a look. Did this company ever make it onto the
yeah,
London Stock
yeah,
Exchange? I
yeah,
doubt it,
yeah,
because
yeah.
their financial control was allowing personal expenses of a
Excellent.
CEO, which, that's investors' money being
Yeah,
Mulberry handbags. That's the example to say it doesn't work. And
yeah.
yeah.
Wow, that sounds crazy. So, were they not aware that you do not show your personal expenses in your company expense account, or they were just being shady? Sorry.
Honestly, I don't know. At that point, the decision went, it was a discussion between the director and the partner of the firm to say, I think we should disengage the client. So I
Yeah,
never found out. But
yeah,
to be fair, people aren't not everyone's an accountant, and that's okay. And
yeah,
so mistakes will be made. And, some people will think that it's perfectly legitimate to,
yeah,
put a Mulberry handbag in an IT company's expenses. And perhaps they will rationalize that in their head and say, well, I'm the CEO of this company. I've got to look good. Um, And it is a debate that we've seen in the accountancy profession. Can I expense a haircut? Can I expense a gym membership?
Yeah,
It's not a no, it depends. And it always comes back to, what is a legitimate business expense
yeah,
for your business?
yeah,
If you're a personal trainer, do you know what? Yes, you can expense your gym membership because that's an actual cost that enables you to do business. If you're a chef, you probably couldn't, but you could probably expense your lovely chef knives, for
yeah,
example.
yeah, yeah,
So it's very dependent. And what I would say is, HMRC at any point can um, pop up and audit
yeah.
your
Okay.
um, expenses, and it it's very rare, but
Yeah.
um, you don't want to be caught out.
So I believe, when it comes to small businesses, finding the right advisor is also a very important task because, like you said, not everybody understands finance. And yeah, so what should people look for in a financial advisor, especially at small businesses?
I think it comes back to that list we spoke about earlier in terms of, when you're making any purchase, whether it's a good or whether it's a service. And I think it's thinking about that purpose. So perhaps perhaps if you have some accounting just knowledge in the background from
Yeah,
A-level
yeah,
business studies, perhaps you only need an accountant to just do that processing or deal with something really complex. And again, you might decide from an affordability point of view to go with just somebody that's really cost effective.
yeah,
For me, I think finance is being heart of a business. And I think getting the right advisor is so important because they will take the time to understand your needs and your organization and to help you with some of those complex decisions you'll have to make. And I think having somebody that meets your needs in terms of communication, so somebody that can be honest with you when you're trying to expense a Mulberry handbag, they need
yeah,
to know, no, you don't do that. Um,
yeah,
in an advisor, it's about getting someone that works well with you, meets your needs, communicates well, and you can have really frank and open conversations with and feel like they're adding value. Because at the end of the day, if they're not adding value, well, what are you paying them for?
yeah. True, true. So now my next question is, you'll have to basically explain this one in detail, a little in detail, scenario planning, basically. So how can looking at risks and opportunities help businesses make better decisions? Just, explain us, through a scenario planning.
Yeah, so gosh, there's lots of examples I could give here.